There was a sound that once defined Great Britain. It was the clang of shipyards along the Clyde, the roar of blast furnaces in Sheffield, the steady churn of car plants in Birmingham and Coventry, the deep mechanical rhythm of coal, steel, and later, North Sea oil. It was the sound of industrial Britain, the sound of production, of relevance, of a country that once powered the global economy. For over a century, Britain made the world's ships, machines, railways, engines, and financial rules. But in late 2025, that sound is fading. Walk through Britain's former industrial heartlands today, and you will hear something deeply unsettling. Silence. Steel furnaces stand idle. Factories operate on skeleton shifts. Investment has vanished. Whole towns exist in a permanent state of economic aftershock. This is not a normal recession. This is not a cyclical downturn that can be fixed by lower interest rates or a temporary stimulus package. This is structural. According to internal Treasury risk briefings and the Office for Budget Responsibility, the United Kingdom has entered a phase of long-term economic stagnation. Real GDP per capita is barely higher than it was before the pandemic. While the United States economy has grown by more than 12% since 2019, Britain has effectively flatlined. The economic model that sustained the UK, financialization, cheap imports, globalized labor, and geopolitical stability, is breaking down simultaneously. Today, we are conducting a forensic autopsy of the British economy. We will examine deindustrialisation, the productivity collapse, Brexit's permanent trade shock, energy and infrastructure failure, demographic decay, and the financial fragility now lurking beneath the surface. Because Britain is no longer drifting, it is stuck. To understand the scale of this crisis, we must look at the numbers. They are devastating. As of late 2025, the United Kingdom has experienced nearly 6 years of stagnant growth. Economists are now referring to this period as Britain's lost half-decade. Since 2019, the United States expanded by roughly 12%. The Eurozone managed around 4%. Britain barely reached 1%. But headline GDP hides the deeper problem. Productivity, the true engine of long-term prosperity, has been effectively flat for over 15 years. Since the global financial crisis of 2008, British productivity growth has been the weakest of any major advanced economy. The cumulative gap between where Britain should be today and where it actually is now exceeds 20%. That is a deeper structural failure than the aftermath of the 2008 crisis itself. Britain did not recover. It adapted by lowering expectations. For decades, Britain replaced industry with services and manufacturing with finance. The City of London became the crown jewel of the economy. Finance grew, property prices exploded, asset values soared. But finance does not build a productive nation. It inflates balance sheets, it concentrates wealth, it hollows out the real economy. Britain became a rentier economy, extracting value rather than creating it. Since Brexit, even this model has begun to fracture. Trading volumes in equities and derivatives have shifted to Amsterdam, Paris, and New York. Foreign direct investment into the UK has collapsed. Financial passporting rights are gone. The city still exists, but its dominance is eroding. The engine Britain relied on is no longer pulling the rest of the economy forward. At the same time, the physical economy has continued to decay. Britain once made things: steel, ships, cars, machinery. Today, it imports almost all of them. Manufacturing now accounts for less than 10% of British GDP. Energy-intensive industries are collapsing. Steel production has fallen to historic lows. Plants in Port Talbot and Scunthorpe are fighting for survival, surviving only through temporary subsidies and political hesitation. Once these industries shut down, they do not come back. Supply chains fracture, skills disappear, regions hollow out permanently. Without cheap energy and long-term policy certainty, Britain cannot compete with the United States or Asia. And energy is where Britain's next failure becomes clear. North Sea oil and gas production is declining rapidly. Nuclear capacity is aging and repeatedly delayed. Renewable rollout has been slow, fragmented, and constrained by grid infrastructure that has not been meaningfully upgraded in decades. Industrial electricity prices remain structurally higher than in the United States. This makes domestic manufacturing uncompetitive by default. At the same time, Britain's infrastructure is decaying. Rail delays are chronic, roads are crumbling, water systems leak billions of litres annually, digital infrastructure lags behind peers. Public investment has been postponed, cancelled, and diluted for decades. Britain has been eating its capital stock. Then came Brexit. Brexit was not a single event, it was a permanent trade shock. British exports to the European Union now face friction, delays, paperwork, and regulatory divergence. Large multinationals adapted, small and medium-sized businesses did not. Many simply stopped exporting altogether. Trade intensity has fallen sharply. Britain is now less integrated into the global economy than it was 10 years ago. New trade deals were promised as a replacement. They did not deliver. The gains were marginal. The losses were structural. Britain lost frictionless access to its largest market and replaced it with nothing comparable. As the real economy weakened, the state filled the gap. Public debt now exceeds 100% of GDP, yet public services are deteriorating. This is the worst possible combination: higher taxes, lower services, and no growth. The British state is now trapped. Every attempt at fiscal stimulus collides with bond markets. Every attempt at austerity worsens stagnation. This is the fiscal doom loop. And then there is the problem Britain cannot solve with money: people. The population is aging rapidly. The dependency ratio is rising. Healthcare and pension costs are exploding. The NHS consumes an ever larger share of public spending, yet delivers worsening outcomes. At the same time, immigration, once a release valve for labour shortages, has become politically toxic. Labour shortages are now widespread across construction, healthcare, logistics, and manufacturing. Wages rise without productivity gains. Inflation becomes embedded. Competitiveness erodes further. It is a vicious cycle. As the real economy weakens, financial stress begins to surface. Commercial real estate prices are falling sharply. Office demand has collapsed. Banks are increasingly exposed to stagnation risk. Pension funds remain fragile. We saw this in the gilt crisis of 2022. That was not an accident. It was a warning. Britain's financial system is deeply dependent on confidence, and confidence is thin. Economic decay does not stay confined to spreadsheets. It spills into society. Living standards have stagnated for over a decade. Younger generations are poorer than their parents. Home ownership is collapsing. Wealth inequality is widening. Trust in institutions is eroding. Politics is fragmenting. The social contract, work hard, play by the rules, and you will be better off, has been broken. Britain once ruled the world. Then it adapted by becoming a financial hub. Now that model is failing too. This is not a temporary crisis. It is the end of a post-industrial illusion. Without productivity, without industry, without growth, prosperity becomes impossible. The question is no longer whether Britain must change. It is whether it can change before stagnation becomes permanent. Britain is no longer moving forward. It is standing still while the world moves on.